The broadcast is now starting. All attendees are in listen-only mode.
Welcome everybody, and thanks for attending the 12 strategies to helping business owners save $20,000 legally. What we're here to do today is imagine. Imagine if you could put $5,000 to $10,000 away each year. Question is, what would you do with it? Where would you go? The possibilities open up and they're really quite daunting when you think about what you can do with that extra cash. My name's Peter Blash and I'm with Maverick Mentoring, and today it's my pleasure to introduce to you Lan Nguyen, and we're going to be talking with she's going to be taking you through the 12 strategies that she's using to save business owners $20,000. And there's a campaign she's got going at the moment where she's looking for her office to be saving $250,000 or more for the business owners that she's working with. So I'd like to introduce Lan to you. She is a chartered accountant and founder of Success Accounting Group. Lan's passion is to work with business owners who value family as the number one most important thing in life. And these are the values that Lan holds to, and this is what motivates her. It's her family, and it's providing for them and looking after them. So without any further ado, I'd like to introduce Lan to you, and she's going to take you through the 12 strategies. So Lan, welcome and thank you. What we want to know is about the 12 strategies. Tell us all about it.
Hi everyone, thank you for joining us today, and thank you Peter for the lovely introduction. Today I'm going to talk to you how we're going with the $250,000 tax collectively that we've saved for our Success family, also known as Success clients. Up to date we've saved already $170,667, so that's a massive win for us in the team, and we're so proud of the achievement, and also helping our Success clients to put that back into their pockets to look after their families. So I'm going to cover 12 strategies, and they'll be grouped into 3. The first will be 10 people or entities that you can distribute your business profit to minimize your tax. The next one would be how to structure your company or your business in order to legally save tax. And finally, the unknown ways of minimizing your tax or pay zero tax on your income that you generate from your investments. So without further ado, I'm going to cover the first one. So if Peter, next slide. So here's it, as you can see, a table of the most popular structures that you could run your business using a sole trader or a company or a trust. And the most important questions you should ask are on the left. So how much tax does it pay? Can we distribute the profits? And does it protect my family home or what you have? So sole trader, as you can see, compared to the tax with a company and a trust, is the highest tax. Even though a lot of small business startups start up as a sole trader for convenience and easiness, but you can see that they pay 47 tax up to, compared to a small company only paying 28.5% tax, and then none on a discretionary trust basis. And you would ask me, why do more accountants don't advise in the trust? So today I'm going to teach you how to do that. The second one is, can it be distributed, the profits? So sole trader, as an owner, you have to pay on the profits that you earn, so you cannot distribute it to anyone else. A company, I wrote limited there, so you can distribute to your shareholders, but again, it's fixed. So if your company, you have 2 shareholders, husband and wife, you're limited to distribute to husband and wife, regardless of the change of your situation or your life circumstances. And a family trust, on the other hand, is the most flexible vehicle. You can distribute up to 10 entities, which I'm going to show you in the next slide, of how to minimize the tax on distributing those entities and people. The final thing is, you must know, is when you run a business, as you know, the business risk is quite high. You don't want to allow creditors accessing the business assets unwanted. So you need to set up a structure that protects your family home first and your business assets and any investment properties that you may accumulate along your business journey. So as you can see, sole trader, no asset protection. Just think of yourself as like a beach whale. If someone sues you for any wrongdoing or negligent, then your family home is the first thing to be lost or access to. There's more asset protection in a company and a trust. So it's careful. So those three things need to tick the boxes when deciding on which entity to set up your business.
So, Lan,
So yes, Peter.
I just had a question. If it's okay, can I ask one? So
yes, please do.
If I wanted to move to a company or a trust, like if I was a sole trader now and I wanted to move to a company or trust, what are the steps that I'd need to take?
That's a great question and a great timing question too. Normally, like a business is an asset. So if you're moving from sole trader to a company or trust, it's like transferring a business asset over. So before, if you did that, there will be tax implications such as capital gain. When you're selling an asset and you make a profit.
Yep.
However, from 1 July 2016, for 2 years, the government at the moment, thank you for the Malcolm Turnbull, he's allowing us to restructure any business to a different entity as long as you meet some criteria and requirements with free from capital gain. So it's more complicated than the calculation, but obviously that's a great window of opportunity for all sole traders that have grown a bit and in terms of profit and want to minimize their tax and want to distribute their profits to their family and their charities and want to protect the assets. So to do that, that's a great opportunity to talk to your accountant or myself in order to do that.
Oh, good. Thanks. Okay, do that. All right. Will we move the slides along?
Yes, please. So as I was showing the trust, you can distribute the profits to 10 people entities using the trust. So let's see, what are the 10 entities? Moving along with the first one. The first one is the most common, your spouse, and this could be your wife or your stay-at-home dads who are busy looking after the kids, but they're not earning a income. And in Australia, thank you for the way that the tax system works, it's taxed at a progressive rate. So the first 18,200 is nil tax, and you go up to 180,000, that's 47% tax. So if you have a business profit in your say your trust of about 50,000, obviously the husband is already got a salary in the business, so that 50,000 could, instead of distributing to the husband and then paying 30% tax, for example, then you can distribute to your stay-at-home spouse, which is a much lower rate. Same with the kids. So any minor kids that you have under 18, you can distribute to them $416 each, and that's nil tax. And the siblings. So this is if they're adult siblings and they're still at uni and they're either not working or have part-time jobs, you can distribute the income as well to them, and they will be, you'll be paying tax at the lower rate, which could be anywhere from 0 to 19% compared to the higher 30% or 47%. So that is legally minimizing your tax by distributing the profits. The next slide shows us also the parents. So these are retirees, and that's grouped with in-laws and grandparents. So these are retirees that not producing the income or working anymore, and they're just looking after the grandchildren, and they're not receiving age pension, because if they receive age pension or Centrelink payments, they could be income tested. So if they are not receiving that, then you can distribute the income like an adult, up to 18,000 free tax as well for each of those. So that's two parents, so 18,200 each, that's 36,000 free tax each year. Okay, the next one is a lot of our business clients, they normally have a startup or have two businesses. So they could have the existing business and start up a second business. And the startup normally is the first year they make a loss. And if we structure it correctly from the start, you can offset your business that is established, that's profit making, to the business that you're making a loss. But clever strategy and setup needs to be done. And finally, you can distribute to a bucket company. So as you can see in my structure slide, the company for a small business is paying tax capped at 28.5% for under 2 million, and if it's over 2 million, capped at 30%. So if you make $1 million and you run out of beneficiaries to distribute, they will suggest to set up a bucket company, and that one is really collecting it's a bucket for the profits of your trust, so that the maximum tax you ever pay is 28.5%. Moving on, if you're feeling generous and you want to donate to your charity, and why not reduce your tax at the same time? So a lot of our clients donate to their favorite charity, where they can also reduce the tax at the tax time, and that means you can donate more as well. And the final one is super fund, which is a super fund is when you donate or contributions to. So thanks to the government at the moment, we're allowed to contribute up to 30,000 if you're into your super fund, and get a deduction for that if you're under 48, and if you're over 50 or 49, you can put 35,000. And that's about to change from 1 July. It's the rate or threshold is going to reduce down to 25,000 and 30,000 respectively if you're over 49. So, but still a great opportunity to reduce your tax, because into a super fund, the tax rate is only 15%, and again, compared to a company is 28.5%. You can see the difference, and a sole trade is 47%. So you can see that the marked difference of the three tax rates that you can reduce your tax. So moving on to the next slide, I'm going to show you how a tax planning session could work, and how it could save you tax before 30 June. So let's meet our client James Packer, who's obviously had a really good year and has company profit of $380,000. And so he's looking at his face, he looks very worried. He needs to cough up $108,300 for his tax year this year. He's booked in a session with myself, and we've gone through, and lucky he's set up a family trust at the start, and he's got a spouse that is not working. He's looking after the kids, and we distribute 18,000 to his spouse. He's got 3 kids at the moment, so we distribute 416 to the 3 kids. That's another 1,200 deduction. He's got parents and in-laws say they're not working, and so because they're over 18, the adults, so we can distribute 18,000 each parent, and that's 72,000 deduction extra. He's got a favourite charity that he wants to give as a donation, so we've put 15,000 to that charity. As he's 48 years old, he can put in under 30,000, so we decided to put 29,000 into the super fund. Packer's started a recent business in the digital world, and it's making a loss at the moment in the first year, and so out of the 380 we can offset the 25 loss, so another 25,000 deduction. And finally, he's got grandparents that not receiving any age pensions, so 18,000 to each parent, so 36,000. So looking at the total deduction in extra or profit that is distributed, it's a total of 196,248, and that reduces the total profit down to 183,752. So an estimate save, which is 55,930 in tax at 30 June. So now instead of owing 108, he owes half of that. And that's just how a trust planning, having the right structure works. Okay, so let's move on to the next. So how to pay zero tax on income and gains on your investment. So as I was mentioning, a super fund would achieve that, and I'm going to take you through another case of how to do that. So the next slide will demonstrate the case. So let's revisit James again. So he's running a business, like we all do, and he's one of his businesses is a signage business, and he's currently leasing his business premises, which is a warehouse that he does not own, and he pays rent every year. And so coming through the tax planning advice, it was up for sale and for $1 million. We found that he has 300,000 in his super fund, and he can borrow the 700 from the bank to buy that $1 million warehouse in Cheltenham. His own business of the signage now pays for the lease and the interest, and in 12 years later, when he decides to retire, he sells the building for $2 million and some capital gain of $1 million. So that's 2 million less 1 million is 1 million capital gain. Normally, if he held it outside, he would be paying 235,000 in tax. That's outside of super, but inside of super, he would be paying nil tax after 60 years old. So there's two benefits here. One, he stops paying rent. Secondly, he's paying nil tax on the gain of the commercial shop or office that he buys. So that is a strategy for business owners where you can buy your commercial premises outright or borrow the money and not pay tax when you do retire and sell. And that one you can do right now. Moving on to the next one. So a lot of people say, how can I get on board on this tax 250,000 tax campaign and become a success client and save tax for them so that they're only paying their fair share. So what we say to those business owners is that if you would like a second opinion on see if you're paying too much tax and an insight on what your numbers say about the profitability and the health of your business, we do one of four things. We can obviously help you with the tax planning before 30 June because that's the period that you can save the maximum tax. Obviously, if you come after 30 June, it's very difficult to implement those strategies and get the best of those strategies that we implement. The second thing is we can help if you're improving the profit of your business, and which is the heart of your business. We run cash-rich business workshops regularly, and we teach people how to implement those strategies to improve the cash flow and accelerate the cash flow in the business owners. Finally, the third one, we can help you with reviewing your business structure to see if it's still the best structure for you. A lot of our clients, they start as sole traders, but as the business kick over to 100,000, it's time to look at whether you're paying too much tax and most importantly, is your family home protected if from your business? And finally, we can also review your books, whether you're using the right accounting software and running your business most effectively, and even provide insight into the numbers to see what it means when you have this much profit or this much expenses, or the ratios are you according to the ATO benchmark. So helping you understand what the numbers mean for the business. So this is what we offer today, and I'm going to share with a couple of success stories in the last week or two that we've helped our clients who have jumped on board with the Success $250,000 Tax Save campaign. And the first one is Mr. Darren Ivankovich. He's the director of Cartoon Tiling Proprietary Limited, and he's been with us for over 5 years, and every year his business continues to grow, but we try to minimize the growth of his tax that he pays. So he has been structured correctly from day one, and it was good timing because he's looked into a deposit for his next investment property, and as you can see here, he's very happy that it's this 21,800 tax save. He can use it as a down payment for the deposit. So yeah, next, moving on, Eric Dickman came to us about 2 years ago. His business was already generating, quite a significant amount of revenue, but he was still a sole trader. So the first thing I looked at was whether we could move him to a discretionary trust in the new year, and we did. And that structure this year has saved him a massive $29,000 for his family, and is great timing for his business expansion. So that was a really good result and win for Eric and for our Success family. The next one is Sarah Bishop, Director of Activate Consulting. So she came to us as a sole trader as well, and we will manage to review and set up a new structure for her, and also look at her finances, how she structured her finances as well, whether she was paying too much on her current loan at the moment. So a quick restructure saved her $6,000 tax per annum, and she used that saving for upcoming holiday, which she didn't have to then save on her day-to-day income. So as you can see, these are only some of the clients that we've have jumped on the campaign the last few weeks, and they're receiving great wins and saving more than their $5,000, and they're using that to back to their lifestyle and helping their family grow. Moving on, so really today I want to offer to clients who are running their business for 3 years or plus, and if your turnover is 200,000 or more, we can save a young family at least 5,000 or more in tax legally, regardless of if you are having an accountant or not, because what we find is having a second opinion will show different ways to minimize tax. So what I'm offering is, if you want to be part of this this campaign, the $250,000 campaign to save tax before 30 June, we're offering a complimentary strategy session with myself before 30 June. And you can go on book online at our website there at www.successaccountinggroup.com.au. So that's what the campaign is about today. And if you listen to this trial strategies, you can try to do it yourself and minimize tax, or you can just come and have a chat to me and we can do it together.
Yeah, thanks, Lan. That was brilliant. I didn't realise that there was just so many different ways that each one of us who owns a business can really make a difference. And it's not even about working harder. It's really about working smarter and making your money work for you, isn't it? It's really...
Definitely, yeah.
Because, I mean, what it means is that the harder we work, well, we're actually making more profit and our cash flow is improving. And with the strategies you've got, it can make a massive difference to our business and in turn to the tax we're going to pay. So I'll definitely be giving you a call for a complimentary strategy.
Yeah. So as I say, it's about legally saving tax. So if you're just paying your fair share of tax, rather than this is not tax evasion, it's about paying your fair share of tax and then reinvesting that money that you save, whether to a family holiday or renovation, or just reinvesting it for investments. So achieving, as our missions say, achieving the goal for your family.
Yeah, beautifully said. All right, so thanks very much, Lan. What you've given us is absolute gold, and I know I'm going to book in for a complimentary session, and I encourage everyone on the call to do the same. Just to go to the W's down there and follow the link for booking in for Lan, or just go to Success Accounting Group and give them a call and they'll be able to sort you out. So thank you, everybody. My name's Peter Blash, and I've been hosting this with Lan Nguyen today, and this is your chance to save $20,000 on your tax or more. So thank you, everybody, and I look forward to connecting with you all again soon.
Thanks, everyone. Have a good day.
Thank you.